So just like you can't trust a coin that trades a couple $1,000s a day because it's so thin, you would never do that with a stock that just trades a couple hundred shares or a couple thousand. So definitely diversifying among multiple assets is the main one. But I'm the same way. Like in my portfolios that I manage, it's about being long certain things, but also being short certain things. Like going into the stock split on Tesla, I was short going into this morning, right? And looking for that pullback that, you had this run up into that stock split that it had today. And then you just figure, okay, it's run up, it's going to sell off. And it did. And then I also had long positions in stocks as well to kind of compensate. And luckily, you get that drop and then you get sometimes that pop in the other names as well. But if the market tanked, at least Tesla would drop and maybe the others would drop and it would kind of hedge your downside. So I think long short is the way to go. Some people use options. That's fine. I've never been a fan of that because I always look at it like this, is like, if you're hedging with options, you're inevitably giving up some of your alpha, right? So, if you're batting, let's say you're batting 80% as a trader, so 8 out of every 10 you win. Why would you ever make it so that it turns out to be that you're only making 600 out of every $1,000 that you could do by hedging? So if you're right enough, listen, if you're a 50-50 trader, then yes, hedging's the way to go. If you have the skills, if you have the ability to read charts, then hedging with options to me doesn't make sense. So that's true, but let's be fair, no retail investor ever uses it for that. They always try to do the get-rich-quick scheme, which is to hit a home run on the option and make 300, 400, 500% in a short amount of time. But you're right, big money uses it to kind of protect themselves, absolutely. So to be honest, I started out stocks. I had about 15 years under my belt in stocks before I branched into crypto, and it's almost identical. And this is why I got to convince you to trade stocks, Frankie, because if you're a technical guy and everything technical applies to any chart as long as it has volume to it, right? So just like you can't trust a coin that trades a couple $1,000s a day because it's so thin, you would never do that with a stock that just trades a couple hundred shares or a couple thousand. But if you're trading like Apple or Microsoft or Tesla, the charts are the same, because the beauty of this, and I know you know this, is like when you're trading charts, you're trading human emotion. You're trading people's emotions. And so people's emotions in crypto, the only difference is people are more emotional in crypto than in stocks. So you get a little bit of a wilder swing, but the levels are still the levels, and the levels will work and the technicals will work. So let me know how I can convince you. Not really much. I more stick to the bigger commodities, oil, natural gas, gold, silver, like those type of things, mainly because those are there's a lot of ETFs that track those things. So it has lots of volume and lots of abilities, and it's easier to read those charts. But you could honestly, trade those as well. Just make sure again that the volume in whatever commodity is enough to kind of make the determination of the chart. I want to show you something, Frankie, because I want to let's just prove my point here. So here's today's, let me show my chart in a second here. Let's do it right here, right? All right, so here's the S&P today, right? So the S&P today opened here, it ran up, which was a beautiful run, and then it pulled back. And there was one trade that I took today that was just, it was just classic charting, right? So take a look here, you have this line here, and then look at how the market pulled back, and then you bounced right there. So all I did was I grabbed the S&P right there, and there's your little gain. Classic day trade. But like this could be a chart of Bitcoin intraday, and it would be no different. You would do the same thing. It broke out, retraced to the support line. You can see the pivot and the pivot, and then boom, and then it actually did it again here before rallying sharply into the end of the day. And then of course, you don't get this in crypto, but there's something called a gap fill. This will be a big resistance if we go there tomorrow on the S&P. So again, the point being is that it's the beauty of the charts is that you're basically trading, millions of investors are buying and selling in here, and it could be Bitcoin, it could be S&P, it could be Microsoft, Tesla. It's all the same. It's all the same human emotion going on. Greed and fear. And yeah, man, it's cool stuff. Sure, I'm not so much a breakout trader unless you get a really good quality bull flag, because by the time the breakout occurs, I always feel like I'm chasing, right? And I hate, like, if there's one thing in trading that I detest is feeling like I'm getting in late to the party. I'm always the one that I like stepping up first. And again, I use the charts to do that, but that gives me the maximum reward with minimal risk, because I'm always, let's say I'm buying at a level, right? So I'm buying at a multi-factor support level. So I know that I'm buying right at support, and if it breaks and confirms, then it fails. And I just exit for a small loss, versus then at least if I'm buying there, the upside is maximum. Once something starts to move up, it's like, okay, well, 1,000 traders already just got in before me. I hate being that person that's late to that party, right? So for me, it's more, buying support, selling resistance, and I love charts that get extended to one direction. One chart, for instance, and again, I hope you guys don't mind that I'm doing a little on the stock side just because crypto's a little bit slower. But
no, I love it.
This was a stock that I put out as an alert today to members. This is GSK, right? So this is GlaxoSmithKline, which is a drug company. But I love charts that have this big collapse here. First of all, Glaxo is like a monster pharmaceutical company, so it's not going out of business, but it's been hammered probably because the government, the U.S. government, passed that bill that was going to kind of hamper drug prices and so forth. But this now is a major oversold scenario, and you can see it started to uptick. You started to see buyers down here coming in. There's a bunch of support down in this lower range right down here and right down here. I mean, look at that little pivot point right there. So to me, this was a high reward, and I was more than happy to buy it right down here. And then it's starting to move up, but I fully expect, a couple dollar gain in a few days, just in and out kind of trader. I'm not someone that likes to stick around. I like to kind of get in, get out. I feel like people that stick around become the pigs that get slaughtered, right? I'm just in and out and say thank you very much.
And I kind of went through the same thing.
And I think honestly, most new investors, like myself included, when I first started, that was what I did. I would see something running and I'd be like, I'd try to catch that lightning in a bottle. And then I kept on getting burned. I mean, think about people that bought Bitcoin at 65 or 67 or 69,000. I mean, you're chasing at that point. It's already up monumentally. And it seems like, it keeps going maybe. Everyone else seems to be making money. You're seeing all on social media, people showing off their Ferraris, and you're like, oh, well, this is a no-brainer. And then you get burned. And I'm sure everyone's had that experience. And so it really does. It's like touching the hot stove over and over again. Eventually, you're like, all right, that's not working for me. I keep losing. So how do I fix that issue? And I think self-reflection is a big part of being a good trader. You have to be able to look at yourself and say, okay, what am I doing wrong here? What's not working? I'm a big fan when you're a beginning investor, a trading journal is unbelievably important, because you basically want to write down what you do wrong and then review it. And you want to say, okay, why didn't this trade work out? And number two is, when it didn't work out, did you exit quickly when you recognized that your thesis failed, right? So there's multiple things, but I do think that trading journal for at least beginning traders is so important.